What does a title attorney actually do that most people don't realize?
Oh, Rich, come on. You wouldn't let me preview the questions.
Oh, that's right. All right. Well, you know what? We're gonna get the answer to this question and many others when we talk to Kim DiBiase from Empire Title, as we call her, on the Loan Doctor podcast. I'm Rich Brandt, the Loan Doctor with the Brandt Lending team, and thank you for being in my waiting room. So we won't go to that question first. We'll go to an easy one. How about this? What drew you to title? Why title as an attorney? Why did you navigate to title as opposed to any other field of law?
So I think it wasn't necessarily title, it was more real estate. I had been a realtor right out of undergrad and worked in that field for probably a year and a half. And then the market started to change. And as a new realtor, I didn't see myself being able to sustain a job where I was 100% commission and relying on the market. And so as that started to decline, right around 2005, 2006, I decided to go to law school. And so when I went to law school, I always knew I wanted to be that attorney at the closing table, handling real estate closings. Again, my timing might have been a little bit off with graduating in 2009. People were still in foreclosures and there were collections lawsuits. And so that's how I got my start. So it wasn't until 2014 that I made my way into real estate closings. But I think my experience as a realtor really showed me what kind of law I wanted to practice.
Nice. Now, as a lender, one of the things that happens that we often the way that we disclose loans, we disclose a loan where we talk about how much an owner's title policy is and a lender's title policy.
Right.
And the reason that a bank does that is because in theoretically, if you don't have a mortgage, you don't have to get title insurance. Why would somebody not get title insurance?
So I think the only reason someone would not get title insurance is if they didn't understand really what it was for. Our office will not handle a closing for someone when they're not obtaining title insurance because you're essentially ensuring your legal right to your property. And without it, you're left holding the costs of any litigation that might ensue if somebody chooses to dispute the fact that you're the true owner of that property. So I can't think of any reason other than not understanding what it's for.
Right. Yeah. Well, I think a lot of times people don't like to get insurance or think insurance is expensive. I'm never going to use it and all that kind of stuff. So how do you get that person who says, well, I'll get it for the lender, but I don't want it for me. I don't need it.
Right.
What do you kind of say to them?
So the good news is that when you're getting a lender's policy anyway, the owner's policy is usually something like $25 because it's simultaneously issued with the lender's policy. So there really isn't a financial risk to it. But there is a story that I tell when people are kind of on the cusp of whether they think they really need it or not. And it is a buyer that came to us after closing and was so grateful that he had a title insurance policy because he had purchased his property cash. He was maybe about 3 months into his ownership of this rental property that he was renting out to tenants, and he got a knock on his door with a foreclosure lawsuit, looking for him to be a defendant in a lawsuit for a mortgage that he didn't have. And so a prior owner had a mortgage that was properly satisfied, but then the lender, I don't know, filed something taking back their satisfaction, saying that the mortgage wasn't really satisfied. So in essence, there was some kind of title issue, but his title policy protected him, and he was able to the title insurance underwriter hired an attorney to defend him in the lawsuit that was filed against him. It ended up going on for months and cost several thousands of dollars in attorney's fees, but he didn't have to cover that because his title insurance policy did. So when I sort of explain, this guy didn't do anything wrong. He didn't even have a mortgage on the property. He was sued for mortgage foreclosure. There's nothing he could have done differently. But that was a situation where his title insurance policy was really necessary.
What you said when you say it's like a fraction of the cost, I know one of the things that I always tell people is for that fraction of a cost that you would get, the lender's policy is a depreciating policy because as you pay off the loan, the value of the policy goes down, right? So,
Sure.
but the value of your house doesn't change. Spend a little extra and make sure you do that so that you have as you increase equity in your home, that equity is protected. Why would you want to not protect that greater equity?
Yes, exactly. And unlike some insurance policies, for title insurance, it's a one-time premium that you're paying at closing. So you're not paying to renew the policy every year. It stays with you for the life of your ownership of the property.
The biggest title horror story I knew, because I think a lot of times people think in this day and age with technology that everything is cut and dry, easy. Now, if there was a problem, I wouldn't be able to buy the house or whatever it is. And so we had a situation happen where a woman bought a house in Florida. She lived in California. She was married in California, but signed the Florida deed as if she was an unmarried woman.
Okay.
Fast forward, she passes. The husband has kids. The kids found out about the house in Florida, and they made a claim on title to the homeowner who just bought the house.
Look at that.
And they had a completely legal claim.
They did
And
because of Florida's homestead laws.
Correct.
Yep.
Yeah.
Yeah. In Florida, if you are married, it doesn't matter whether you say you're not married. If you truly are married, your spouse has a homestead interest in that property, even if his or her name doesn't appear anywhere on the deed or in the records. So
That's
that
correct.
makes sense.
So he lost interest in the house, but was made whole by the title company.
Sometimes it comes down to being paid for something.
Yeah,
And
yeah.
that's what the title policy's for.
Yeah, unbelievable. So,
I'm going to use that one now.
oh, good. You're welcome to it. You're welcome to it. Talking about that, what are some of the things that surprises people the most when title problems show up?
So I think what surprises people the most is that an actual title issue does show up, because I think I can't tell you how many people come to me and say, oh, I've owned the property for years. I know the title's fine. How do you really know until you do the search? So I think when we come to them and say, there's maybe this open permit from 15 years ago, or your contractor placed a lien on your property and maybe he didn't take any action against you, but it's still there. I think that's really what surprises people, is that there actually is an issue to begin with.
What about mortgage companies not recording a satisfaction or not doing it properly? How often does that come up?
I think it comes up more often than you'd like. A lot of times with either private lenders or maybe lenders who have gone out of business after many years, or the loan has been sold a few times, it can be challenging to track down who was really supposed to sign that satisfaction.
In those situations, what are the steps? What are some of the steps that you do to rectify that?
So we have to do our diligence. We have to follow the track to see when the loan was assigned and see if we can find the end bank that actually has the power to sign off on that satisfaction. So it takes a little sleuthing and investigative work on our part, but it's part of our job.
That's nice. Okay. Now, I will tell you, it's funny. I get spoiled because I use you all the time, and every now and then we get stuck with having to do with another title company, or sometimes out of the area. And we had a situation come up the other day where the woman was in her late 80s. She's owned the house forever. We're doing title, and a bunch of title issues came up. There was a couple of liens. There were a couple of judgments against her, not even her, but similarly named people, and all this kind of stuff. And then there was a bunch of unrecorded mortgages from 25 years ago,
Right.
that the institutions don't exist. And the reason I bring it up is because the surprise wasn't that all this stuff existed and it wasn't taken care of. The surprise was the title company said, here, you go do it.
You do it. Right. Yeah.
And I'm like, I don't understand. My title company does this all the time.
Right.
And you take for granted that not everybody does.
Right.
So the great thing about title work, and the great thing about what you do, and even to an extent what I do, when everything is perfect, there's not a lot of difference between what we do. Right, between some companies and others, other than service and all that kind of stuff. But there's not a huge difference. Where we really shine, you especially, or both of us, where we really shine is when there's a problem.
Right.
And the thing is, you never know when there's going to be a problem.
That's true.
So do you want to go to somebody who you hope for the best if something does come up, or do you want to go to somebody who's prepared for a problem if they see one?
Right. And we try to be as full service as possible. We don't want people out there trying to cure these title issues on their own. We do like to hold their hand and make sure it's going to get closed. But also, I think that brings up a point that, at least in Florida here, title companies don't have to have an attorney on their staff or running their business. And so I'm not sure how people deal with that because from my perspective, when issues come up like you're describing, there are steps that need to be taken. And sometimes I have to make a legal argument, even to my own underwriting counsel, about why something is an issue or a non-issue to get it removed as a requirement from the title commitment or to be able to move forward to closing. So I think that's one of the benefits of having an attorney on staff with your title company is that they can make those legal arguments or take the legal action in court that's needed to clear the title issue.
You mentioned underwriting counsel. What is that?
So every attorney or title agent that's issuing title policies has a membership or an agency agreement with an underwriter. And so the underwriter is who's issuing that title insurance policy. So when we get a title commitment, it comes from our underwriter. It has requirements on there that we have to meet for closing. And if there's any question about what steps need to be taken to clear that requirement off of the commitment, we have a resource of an attorney at the underwriter, our underwriting counsel, who will give us a judgment call and will tell us the steps that we need to take.
Got it. Okay. So really, the underwriter portion is really the part that says yes, we can issue title for this person for
Correct.
this on this property.
Yep. And there is some discretion on behalf of the agent. We can make some judgment calls ourselves, but we always want to be backed up by our underwriter.
Okay. Now, how is underwriting when somebody is buying like a condominium? Is the underwriting process different? Like if they have like mechanics liens or like a lot of
A little
times
bit.
with
Yeah.
with a condominium they might have work being done on a property but not on a specific unit, so they have these liens. How is that handled?
So from a title perspective, if the association is having work done and they're in the midst of it and they haven't paid for it yet, we can get what's known as a sufficient funds affidavit. So it's essentially the association letting us know that they have sufficient funds on hand to pay for the work that's being done. And we can record that affidavit and keep it in our file, and that will serve to clear the title. So that'll release the unit from any liability having to do with that particular issue.
Okay. Now we were talking a little bit before about underwriters and underwriting in that process, and I understand there's a new law in Florida. We're shooting the podcast in Florida, but there's a new law in Florida that requires, I'm not sure exactly what it is, but that attorneys that do title work have to have a minimum amount of work that they do in order to get underwriting insurance. Can you elaborate on that or explain it better?
So I think what's happening is not necessarily a Florida law, but there is a specific underwriter called Old Republic, and they had a joint venture agreement with a company called the Fund. It's Attorney Title Fund Services. And the fund was around for about 75 years, and you had to be an attorney to be a member of the fund, and you would be underwritten by Old Republic. So there was this joint venture where you're a member of the fund, but your policies are issued by Old Republic. And news to us this year is that the fund is no longer going to be continuing in existence. So all of us attorney members of the fund are now going to be agents of Old Republic. We are now subject to whatever minimums Old Republic puts in place for how many closings you have to do on a monthly or yearly basis. And thankfully, we have a pretty good volume of closings, and so we're not subject to losing our membership or agency affiliation with Old Republic. But unfortunately, for some attorneys in Florida who maybe practice in other areas of the law, like probate or business law, and do only a few real estate closings per year, they might be getting that privilege taken away from them. So we are encouraging attorneys to partner with us if they're in that position so that we can help to get the closing done still and serve their client, and they still retain their relationship with their client as well.
All right, I'm going to challenge Cole to make sure that your number's at the bottom
Sounds
so
great.
that attorneys who might be watching this can reach out to you if closing isn't a main part of their business.
Right.
And they want to have somebody that they could refer to. I think that would be great.
We're happy to help. It's a win-win.
Tell me, what does a title attorney do that people would be surprised to know that that's actually part of the process?
You seem to really love this question.
I do. I said we'd get back to it.
So I think what can be confusing about what a title attorney does is that real estate and title, they're kind of broad. When you say real estate or you're a real estate attorney, you might think that we handle disputes. You might think it has to do with easements or zoning or land use, and all of those are subsets of real estate. So from a title attorney perspective, we are helping to draft the contract. We're reviewing the critical dates under the contract to make sure everything stays on track. We're reviewing that title commitment for the requirements or any exceptions to the policy to make sure that that buyer is walking away with marketable and insurable title, and they have a solid insurance policy. So we are essentially making sure that they have the legal right to that property with no other claims except for the lender that they've authorized to have a mortgage lien on that property.
Okay.
Does that answer your question, or should we circle back again?
No, that's good. Maybe I'll ask it 4 more times. One of the things that I don't know if this changed recently, because I think a survey is required now. Although, is a survey required on a transaction that doesn't have a lender?
No, that's optional. I
Okay.
always recommend it because your title insurance policy is going to have an exception for what would have appeared on the survey, even if you don't get one. So you might as well get one and know what's accepted.
Got it. Yeah, that for me, it's one of those chicken or egg situations, because we don't require a survey, but we don't allow for the exception.
So in order for us to
So
remove
in
the
order for
exception,
you, right?
you have to
So
have a
you got to have
survey.
a survey. So it's kind of interesting the way that sort of works. What's the craziest title issue, or like one of the crazier title issues that you've come across?
So I think the one that I described earlier was probably the craziest, most out of the ordinary, because you just don't see it. So to back up a little bit to what happened when my buyer had come to me after closing and said, "Hey, I purchased this cash," the sequence of events was that the prior owner's lender had satisfied their mortgage. They had received payment, but maybe their payoff wasn't correct, and they tried to record something taking back their satisfaction, saying, "Oh, no, we didn't really mean to satisfy that mortgage." But they did satisfy it. And our buyer was a purchaser for value and had no interest in that prior mortgage. And I don't think the bank really had any grounds to rescind their satisfaction. And I don't think that happens too frequently. So that's why I use that as my example. It's very much out of the ordinary.
And so walk us through the title process from a contract to closing
Sure.
on a purchase. Maybe we'll do one, walk us through the process, how it's different on a refinance. But,
Okay.
but first, walk us through the process on a purchase
Sure.
from contract to closing.
So you do mention from contract to closing. I would love for it to be from pre-contract to closing, but unfortunately, I don't usually get involved that early. In Florida, realtors are who draft the contract, and so it usually comes to me when it's in a signed format.
Okay.
But what would be wonderful is if buyers or sellers and realtors would come to me before the contract is signed so that I could have some input on maybe what should be in there, certain addendum or riders. But essentially what happens is we receive a signed copy of the contract. We will send out our wire instructions or our link to our website where you can make your escrow deposit so that the buyer has their money in escrow. The inspections will start, and during that time period, we're doing our searches. So we're getting a municipal lien search from the municipality. We are getting our title commitment. If there is an HOA or a condo association, we're getting an estoppel letter to find out what's due to the association. And once we get that title commitment back, we look at what our requirements are and what needs to be done for closing. So a lot of times we will have to get a mortgage satisfaction from the existing lender. So we'll get a payoff of that. We will also prepare the closing documents that the seller is going to sign. So the deed, bill of sale, closing affidavit, most importantly, the settlement statement that has all those numbers on there, the debits and credits of what each side is responsible for. We'll gather the tax information to make sure that is up to date. And then it's the fun part. Then it's the signing and the closing and the funding of the deal.
Nice. Now, you mentioned the earnest money deposit,
Yes.
The wiring instructions for the earnest money. Why is it important that you're holding the deposit?
So I think it's important that the funds are not only held safely, but at a neutral third party. I think it might be a little bit irresponsible for the seller to receive the funds before the contract is really fully executed on. So we actually take that very seriously. We have a lot of procedures that are in place. We never email wire instructions. As I mentioned, we have on our website a secure portal that will help to make sort of a Zelle-like transfer from your bank account. And it's just important, especially if a dispute arises and maybe the buyer or the seller doesn't perform what they're supposed to under the contract, that money is held in escrow until that dispute is resolved.
Okay. Now, one of the things that I do want to be do want to mention, if we're talking about like escrow deposits and stuff like that and sending out wires, make sure that if you ever get wiring instructions, that you call the person giving you the instructions on a number not on a number on any of the instructions that you received.
That's
I
correct.
think, well, right? Tell us about some, what's happening with like the email and wire fraud, or not wire fraud, but how that kind of stuff gets intercepted.
It can be wire fraud, yes. So from what I understand, and I'm not a huge tech person, but email really is it's not secure.
Right.
Even secure email, there's a way for it to be hacked. And so what we have seen in our industry is that there are bad actors that are hacking into email, and they're changing the wire instructions, or at the very least, they're changing the phone number that's in the email sending the wire instructions, so that when someone picks up the phone and calls, like a good person should, to verify the instructions, they're getting this bad actor on the phone who's then confirming their bank account information. So it's very important to use a trusted phone number that you've known since the start of the transaction or that's visible on their website.
We had a title company in Miami Gardens wire a payoff to the wrong entity. $600,000.
It's a lot of money. It's a lot of money. And there are security features out there now where everything can be verified. The company we use is called Certified, and you can verify wiring instructions for known lenders and also for even sellers that we're dealing with to make sure that their proceeds are going to the right bank account.
Okay. What are some of the small mistakes that turn into a big problem in the title process?
Some of the smaller mistakes usually have to do with how things are executed. It may not seem like rocket science to sign a deed, but it does have to have certain components on there. If a marital status is missing and it happens to be homestead, as you mentioned before, there could be someone that has an interest in that property that probably needed to sign that deed. So it could be that someone didn't join on the deed that was supposed to, or that it wasn't properly notarized or witnessed. So we do see a lot of those typos in the past or mistakes when it comes down to signing that could have been caught at the time that now become a bigger issue because maybe those people are deceased or we can't find them. And so we have to take other curative measures to be able to close the deal.
What are some of the dangers that people get into when they're using like a power of attorney?
The dangers, meaning, can you expand on that?
Well, I guess what are the extra elements of risk when somebody's using a power of attorney to, let's say, they're not in town, so they have somebody sign on their behalf.
Sure. Yeah, it's common. We see that either with older people or with someone who happens to be traveling, but we do have to take extra measures to make sure that the POA, power of attorney, is valid and that it is the original, so that it hasn't been revoked, and just making sure that it has the proper language in there, that they have the authority to do what they are intending to do. So whether that's take out a mortgage on their behalf or be able to sell the property, you want to make sure those powers are in there because powers of attorney can be very limited or they can be very broad in scope.
Well, I know for a mortgage, we have to have a power, in order to use a power of attorney, we have to have it has to be specific to the property that's in question. And we also typically, in most cases, can't do a mortgage with a power of attorney when we're doing a cash out. When somebody's taking cash out to protect the homeowner, we kind of prohibit that.
Protect that equity.
Yeah. Now, how is technology, changes in technology impacting the closing process, how title searches work and all that?
So I think in a positive way, it's helping us to be able to communicate more proactively with people and keep them informed of what's going on in their transaction. So there's closing software and there's automated email messages that will go out to keep people informed and what's going on in their transaction.
Okay. Now, what about e-closings?
So
is that becoming more common?
Are not necessary.
Tell us what that is, too.
Sure. So I think e-closing is kind of a broad term, and it can mean a number of different things. Electronic signing is one thing, but closing entirely online isn't something that we do here in Florida just yet. So what I am able to do is if someone is out of the country or traveling or maybe just wants to sit in the comfort of their home when they sign, I can set them up with an online notary who will verify them either through biometrics or through their identification with answering some questions about themselves, and they will be able to sign entirely online, and the PDFs that we receive are going to be our originals for closings. But on the lending side, we're not yet yet able to do that in most situations. If it's a private lender, they may authorize electronic signing, but for the most part, we see lenders still wanting those wet signatures.
I have a theory on why that is, but I don't know if I'm right.
Let's hear it.
My theory is that in order for a bank to foreclose, the bank has to have the original note.
Mm-hmm.
If the bank doesn't, if there is no original note because it was signed electronically, I don't know if lenders yet know how that's going to go
Okay.
in trying to defend that position. And I think that might be the reason why they haven't allowed it yet.
I think that makes sense. I think that there should be, again, I'm not a tech person, but I think there should be a system in place where you can track, sort of like they do with cryptocurrency and blockchain. You can really track who has digital custody of that note.
Right, but I guess you would need the legislature to define original.
Sure. Yeah.
Right? That's the trick and I don't think, it doesn't seem like any lender wants to take the chance.
That would make sense. Risk mitigation.
Yeah. Tell me this, because we do a lot of transactions together. What makes, in your opinion, a great lender or title attorney relationship?
Open communication. I think that the more that we know up front, the better. When we get our title order from the lender, which is their request for the policy, and us starting the process, making sure that we have all the information that we need, making sure you have all the information that you need from us. So just clear communication, whether that's by email, text, phone. I think having that rapport, the fact that I see you on a weekly basis really helps.
Gotcha. Yeah, I'm like a stalker. So, are you seeing more issues with investor purchases or inheritance? Like where are in terms of like the type of transactions that usually that tend to be a little bit more difficult? What type of transactions are they?
I would say if it's between those two, that I would say inheritance, because a lot of times people don't understand what needs to be done when someone passes away, because depending on how that person held title on their deed, you may or may not need to go through the court process of probate. It could mean that you just have to file some documents in the property records and you're good to go. If that person was a foreigner and they owned property here that was worth more than $60,000, they might have to go through an estate tax clearance process with a CPA. And I would say that the average Joe doesn't necessarily know whether they have to go through those steps. And so by the time it gets to us, they think they've done what they needed to do and they're under contract to sell. But now we have the hurdle of clearing title when there was probate required or one of those issues.
Now, how does and actually let me ask this two-part question.
Sure.
What is FIRPTA?
Okay.
And how does it impact the closing process?
Okay. So FIRPTA stands for the Foreign Investment in Real Property Tax Act.
Yeah.
And if you are selling property and you are not a U.S. citizen or permanent resident, there is a withholding that happens at closing of usually about 15% of the sale price. And that will be remitted to the IRS as sort of a security deposit that person is then going to file their tax return and claim any income that they may have generated from the sale of that property. So it comes into play in a good percentage of, I would say, a small percentage of the closings that we handle. And sometimes there is going to be a CPA involved that's helping to draft those forms. And a lot of time there's a long time frame involved. The IRS isn't known for being the most efficient when it comes to returning funds to people. Yeah. So it can take some time.
All right. So now I'm going to ask another two-part question.
Did I answer the second part of that?
You answered it.
Okay.
You answered it perfectly. So question number two, just because a lot of foreign buyers happen to be investors, what is a 1031 exchange, and how does a 1031 exchange impact the title process?
So a 1031 exchange is taking advantage of a part of the tax code where you are deferring the capital gains that you may otherwise have owed on the sale of that property. So there's a little bit more to it than some people realize. A lot of them come to us and they think they can just do it instantly. You do need to have a qualified intermediary to hold the funds, because you can't come into contact with those funds. And there are time frames that need to be followed as far as when you're going to roll your funds into a new property that you're purchasing. So you're trying to defer the gains on the property that you're selling by putting them into a new property that you're going to be replacing it with.
Right. So how does it impact the title process?
So from
both
a title,
ways, from the on the property that they're selling and the property that they're buying.
Mostly on the property that they're buying because, the property that they're selling, they can't come into contact with those proceeds. So our settlement statement actually shows the proceeds going over to the qualified intermediary at the 1031 company instead of the seller directly. And that's where the funds will be held. And then when they purchase their property, that's where the funds will be originating from.
Okay, so on the purchase side of the transaction, there's not a lot that you do different.
Correct. The
Got
funds
it.
will just be coming from the source of the funds will be the qualified intermediary.
Got it. Okay, but nothing from a title work standpoint that has to
From
happen.
an ownership and title perspective, you're still going to own the property in your name. It's really just the handling of the funds.
Right. Well, doesn't it have to be recorded in the same name as the, right?
Rich, that would be a question for your CPA.
Okay. Okay. All right. No, I believe it has to be that there's, I'm trying to think about the term, but that there can't be a change in ownership.
Correct.
Right. So, the controlling interest or whatever. Okay. What should consumers look for when they're selecting a title company?
So I think I touched on a little bit earlier that my recommendation would be that the title company is either attorney owned or attorney operated with an attorney on staff.
Okay.
I think it is typically roughly around the same cost to close with a title company that has an attorney or doesn't. So you kind of get that added benefit that if something does go wrong in the transaction, you have that attorney that can take the next steps needed to clear title. I think it's also important to look for a title company that has an established presence and you know that they're not going to go anywhere and that your funds are really taken care of. So as we mentioned before, we take wires and any transfer of funds very seriously, and we have steps in place to make sure that the funds are protected.
Is there any issue with like dual representation in that process?
So for
As
us,
the attorney?
we're acting as a neutral third party when we're designated as the title company. If someone does want legal representation, that would be a separate agreement with our law firm that we would be able to offer. But typically, as the title company, we're going to be the neutral third party helping to execute on that contract.
Okay. So this is again a sort of another, I'm killing you with the two-part question.
You're testing my memory here.
Yeah, no. Well, I think buyers and sellers look for different things, or different things are important. So when somebody is selling their house, what is it that they should be looking for? What is it that they should be doing before closing? They're thinking about selling their house. What should they do?
So if you're thinking about selling your home, you may want to have an attorney look at your deed to see how you hold title, to find out if there's any of those issues that I mentioned before when it comes to inheritance or probate, if someone passed away on title. Even if it's a trust that owns the property or the trustee of the trust, you'll have to gather your trust documents. If there's a power of attorney, you would need to gather that. So it's very much a case-by-case situation, but I would say have an attorney review the deed to your property and any relevant documents that pertain to that so that you can get ahead of what's required when you sell.
Okay, and what about if you're thinking about buying a property?
If you're thinking about buying a property, I say it's never too early to get in touch with a real estate attorney to talk about that contract that you're going to have to sign that's going to be prepared by the realtor. It is a form contract that is put out by the Florida Bar and the Florida Association of Realtors, but it's very important that the right provisions the boxes are checked properly. Maybe there's some additional terms that could be added in there. So building rapport with an attorney that can help you through that contract process. We're so accustomed to reviewing those contracts that it takes us just a few minutes to see if there's something that's off or if there's any red flags. So I think if you build that rapport ahead of time where you can just text that attorney or email them the contract before you sign it, it's going to put you in a much better position.
Nice. That's good. That's good advice.
Thank you.
Advice. I work with a lot of people who are self-employed and a lot of investors. Is there any difference from the title perspective for somebody who might be self-employed?
From a title perspective, no. I think that comes up with your lender with what you have to document. But I would say for investors, we will find out in the next couple of months whether this is really happening. But as of right now, there is some data collection that's coming into play through FinCEN. I don't know if you're familiar with FinCEN.
Yep.
As of March 1st, we will have to collect a lot more information, and it's going to be usually on the investor side because it's if you're purchasing a property with cash and you're either purchasing it in the name of an entity or a trust, we're going to have to collect a lot of details about you, your social security number, your date of birth, your place of residence. Can't be a P.O. box. We're going to have to get account numbers from where your funds are coming from. And this is just a way for the government to track money laundering, really.
Right. Yeah, no, believe me, we have to document all funds in the lending aspect. People, I can't, when you're buying a house, you just can't have $50,000 just show
Just
up
appear in
and
your account.
us not know
A
where it's
gift from
from.
Aunt Edna, right?
Where did Aunt Edna get it?
We'll have to find out
it's to
as of March
protect. Yeah.
1st.
What so for investors who are purchasing, what are the additional documentation that you need from an investor who's buying or selling a property?
So if they are simply being an investor doesn't necessarily raise any additional documentation, but if they are purchasing or selling in the name of an entity, like a limited liability company, we would need that company's operating agreement. We'd need to see that the company is in good standing and confirm that the person that's signing on behalf of the company is actually who has authority to do so.
Yeah, that's the trick. I've seen that. I've seen that impact a bunch of deals where the guy who signed the real estate contract didn't have authority to actually sell the property.
Right. So yeah.
So yeah, okay. So what are some of the red flags that somebody might have that people shouldn't ignore?
When it comes to the contract or title commitment.
Yeah, when it comes to title, I mean, I guess the whole idea behind a title policy is you're being protected from any of those red flags.
Right. So I think one of the things that gets easily overlooked is whether there are any open permits, expired permits, or building code violations on the property. It's not necessarily a title issue. It has to be recorded in a certain sense and in order to become a title issue. So sometimes there are things that come up on our lien search that don't raise a title issue. So if you didn't have your realtor or your attorney put additional language in the contract calling for the seller to close those issues out, you may be obligated to close on that purchase with those issues in place.
Oh, okay. All right. That's big. All right. That one's good. That's good. That's a good nugget right there. Okay. So this is as an entrepreneur yourself, right? Being part owner of the title company along with the law firm. What's the best advice you ever received?
As to owning a business?
Yeah.
Or just best advice I've ever received?
Yeah. Or it could be about title work if you want to get specific, or
No,
there
I
could be
think-
two different answers.
I think the best advice is to do what you say you're going to do, because I think you'd be surprised how many people just don't do that.
Oh,
Isn't it easy just to do what you said you were going to do?
it's the funniest thing that just calling somebody back and they're like, yeah, you're the only guy that called me back. I
amazing,
can't believe
right?
how many times I've heard that.
Do what you say you're going to do, and if you can't perform by the deadline, at least let them know what's going on, give them a status, communicate, but do what you say you're going to do.
No, that's awesome. That's awesome. Now, tell me this: what's the biggest myth about title work?
Biggest myth about title work? Ooh, I don't know. Are there myths out there?
I think there's myths.
Okay.
There's got to be myths.
Give me one. I'll tell you if it's true.
Oh, I don't know. I can't tell you a myth. I honestly, we touched on it a little bit earlier. I think the biggest myth about title work is that it's not necessary.
Yeah. It's a misconception. I think that it's optional or that you don't necessarily need it, but it's a very big investment. Even if you're a wealthy individual, it's a lot of money that you're putting down for a property, and I don't know why you wouldn't want that protected.
Do title rates vary from company to company?
Not necessarily. The state has a promulgated rate, and the title insurance policy is going to be issued based on the purchase price. So there's a calculator right on our website if anyone's curious how that's calculated, but it shouldn't really vary.
So promulgated rate means?
It just means the rate that's set by the state of Florida.
Okay, got it. And that's based on the loan size?
It's based either on the loan
purchase
amount or
price.
the purchase
Yeah,
price.
I gotcha. I got it. Okay. All right, cool. Let me ask you, do you have any questions for me?
Rich, I do. I want to know if you have any hidden talents or special things that you can do that people might not know about. Let's learn a little bit about Rich.
Wow. I don't, you know what?
You can't say the alphabet backwards or
I can't,
something cool like that.
I can't say the alphabet backwards. Okay. About my only talent is I can play the piano. Most people don't know that.
What's your best work? What can you play? Mary Had a Little Lamb, or are we talking Chopin here?
No. We're definitely not talking Chopin. Maybe Amazing Grace.
Okay.
Do
you sing with it?
I do not
I have
sing.
Heard your singing voice.
Oh, my singing is really, really bad. It's not good.
Rap, is that online somewhere? Can we find that?
I hope not. So yeah, no, I don't know. I think you know what? It's funny. My hidden talent is doing what I do. Like it really is. It's fun being being good at this. So Kim knew me way back when I owned a process service company.
That's right.
And I had a process service company for a long time. And one of the things, the way that I talk about that job a little bit was when I was in that job, I looked at the world like a puzzle. That's all I did was build a puzzle. Where's this guy? Where's this person that we have to find? Where's his assets? Whatever. Yeah, and putting the pieces together. And like one scenario that I did for somebody else that we know is we were serving somebody who had moved to England.
Okay.
He moved to England, and the way that we found him is he posted something on Facebook. And with a picture of him that was a recent picture, and behind him was a really, really unusual mirror right behind him. And so this guy moved from Florida to England, and we're thinking, okay, he had to find the place. It had to be advertised. Like it had to be advertised. So we went to these sites that advertise international property, and we scoured, and we found a picture of the living room with the mirror.
Incredible.
And that's how we found it. It's just building a puzzle.
Right.
So I say the puzzle because when I sold my company, and Kim's husband helped me he was my attorney.
Shout out to Mike DiBiase.
Shout out to Mike DiBiase when he was my attorney when I sold my company. But when I sold my company and I got into the mortgage business after my mom got cancer, and I got into the mortgage business, one of the things that happened to me really quickly is I really assimilated into it fast. And the reason I say that is because it was the same thing. I was still building a puzzle. Mm-hmm. The only difference is different pieces.
Right.
But mentally, I approached it the same way, and so I was able to catch up really, really quick, which has kind of allowed me to do that. And I like what I do. I love being able to help people accomplish their goals. And watching it, it's like I said it earlier on a different episode about it's like watching your kid succeed. You know what I mean? When you teach your kid or whatever, and then they accomplish something, you get a tremendous amount of satisfaction of that. Yeah. I get that. I still get that. You know, after hundreds and hundreds of closings, I still get that satisfaction when I see somebody take something that they want to do, listen to the things that we tell them, and then they accomplish it. It's amazing.
It is amazing. And I think it's probably thousands and thousands, not hundreds and hundreds.
Yeah. Okay.
At this point.
Yeah. It's quite a bit, but that's good. But yeah. That's pretty much it. All right. Well, I appreciate you being here. This has been
having me.
Absolutely. This has been the Loan Doctor Podcast. If you want to know more about Kim DiBiase and Empire Title, if you're thinking about buying or selling real estate in Florida, hold on, you're licensed in a couple other states?
I'm licensed in 3 other states, but my practice is here in Florida.
Okay. So if you're thinking about buying or you have any questions for Kim, you can see the number that I know Cole is going to put there.
You sure will.
And we appreciate you being on the Loan Doctor Podcast. Thank you again for being in our waiting room.